Okay, interesting and great start to the morning. I'm actually about to hit the gym. It's been a very long time since I've been in the gym. I'm a very weak person, and that is going to change. So I'm on a fitness journey now, and I want to take you guys through that transformation, and I'm terrified about it. And I got my trainer on the way, and he's amazing, and I need people to support me and to help me grow. So I am going to be diving into that, but that's not the purpose of today's video. Today's video is really, really important, and it pertains to debt weapons and getting qualified for them. And it's a conversation that I had just yesterday that I needed to share with you, and I'm experiencing it now myself. So I'm waiting for a call back from the bank, and I'm applying for another debt weapon right now. It's a $250,000 secured home equity line of credit against a non-owner occupied investment property. They're not easy tools to get. Some states don't even offer them, like Texas. But if you can find one, they can be terrific. I mean, imagine having access to another $250,000 that I can use same as cash on anything. Well, that really arms me. It prepares me for opportunities. And so, we're pursuing it. It just so happens that that property is the last debt that I have showing up on my credit report. It's like $93,500. Unfortunately, it's a debt that's being paid off really quickly, why I say unfortunately, because it means that I'm still obligated to a minimum payment of, $1,850-ish. So if you take the $250,000 and assume it's completely utilized, meaning the bank in underwriting is going to assume that I'm going to use the full $250,000 when qualifying me for the mortgage, which means that those two combined minimum payments are going to total somewhere around $4,300 per month. Now, really not a big deal if you're demonstrating a good enough income level, but here's where things get tricky. When you're self-employed, as an entrepreneur, as a real estate investor, you're trying to take as many tax deductions as possible. This is just one of the perks of being self-employed. You hear about it all the time. Start your own business or have an entity so that you can take deductions on tax deductible items and expenses. And so sometimes you can get really close to or all the way down to zero. I had a really expensive year in 2016. So our adjusted gross income, which is the taxable income after your tax deductible expenses have been taken off, well, that was a benchmark year for us to avoid taxes. Well, that's not helping us today, because when you're applying for some of the most popular debt weapons, like a home equity line of credit like this, well, they're going to be looking at my most recent 2 tax returns and averaging the adjusted gross income level. Well, because of that, they're going to ultimately end up penalizing me for not having paid my taxes. So it's a bit of a lose-lose scenario. You have to decide which one is most valuable to you. Because that fact is what it is, we have gone about strategizing our plan since 2016 totally differently. In fact, in 2017, we paid tens of thousands of dollars more than we had to because we want to be as lendable as possible. We want to have as much borrowing strength as we can. And coming into 2018, where we're having another benchmark year and I mean, truly exceeding all imaginable hopes and goals that we had, which is awesome because it shows us that it's possible for anybody, right? And so, well, we're gonna pay as much tax as possible. Right now, I have withheld in taxes a $10,500 sum each month automatically, but I'm shooting to hit somewhere closer to $250,000 worth of taxes to be paid for 2018. That sounds pretty sucky. I mean, even saying it out loud, I don't like the sounds of it at all, but I do love the sounds of being able to walk into the bank and be considered that tier 1A paper borrower at all times. And for the most part, if you're looking for a decent rule of thumb, trying to target somewhere around the 30% debt to income ratio mark, meaning all of your minimum payment obligations fall at or below 30% of your taxable income amount. Not after taxes, not the same thing as net, okay? It's still before taxes, but it's the taxable income, okay? So if you had $15,000 worth of income and you wrote off $5,000 per month worth of expenses for, say, business-related expenses, and you had a $10,000 adjusted gross income, a taxable income amount of $10,000 per month, you would want your minimum payment obligations on your debt servicing, this does not include your household expenses, your monthly expenses, you would want that to come in somewhere closer to $3,000 or less. So that's a decent conservative rule of thumb. There are lenders that will go higher than that. There are exceptions that are made, no question about it. It just gets harder and harder the higher you get. And so I'm running into this, right? I'm being penalized right now for trying to have a great tax plan. And so I, for myself, find more value in having the potential of leverage, and I want access to capital. I want as much money as I can. I hate debt. Like I said, $93,500 is the only debt I still have. And it would be very easy for us, because we have a target property to invest in right now in mind, to just turn around and do a cash out refinance instead of getting access to this home equity line of credit, which is what we're considering doing now. And that would not be a difficult thing to qualify for, even averaging the last 2 years worth of adjusted gross income levels and having a 0 AGI year in 2016. So this is it, guys. I just wanted to bring this to your attention. I know this isn't as specific as I sometimes like to get in terms of giving you actual case study examples beyond my own example here, but I wanted to at least generalize to the extent that I know what's going on now with this bank, so that you guys are thinking about it as you come into the end of your tax year. You got to be planning this stuff out, and these numbers can be different for each and every person. This is why it helps having an extra set of eyes on your biggest decisions. So consider getting your coaching sessions scheduled in the link below. freecoachingcalendar.com is where you can access that. Keep in mind, if you guys don't want to wait in that long line for a free coaching session, you can always jump the line and take advantage of one of our discounted quick start vacancies, and that's where you're going to get the best price. Keep in mind the prices are also going up, so you're going to want to try and get in before that happens. Hopefully we'll play a role in your success, guys, and be a mentor and a coach to help you make great decisions and see some of these angles that you may not be considering going in, because you're going to want to understand how long this will hurt you. Look, if I file the taxes wrong this year, just like I did in 2016, it's already hurting me all the way through 2018 right now. That's based on my filing for 2016, which didn't happen until 2017. So this has a multiple year impact on my game plan. Don't go out there and make stupid mistakes that cost you years of time and all of that opportunity just because you didn't know any better at the time. That's why you're gonna have to build a great team, and that's what I do. I build a great team. Guys, I love you so much. Thank you very much for your participation. Continue to stay subscribed. Turn on those post notifications too, because you're gonna wanna see a lot of the updates that are coming out. I've got some brand new content never before seen here on this channel that will change so many lives. It's already changing mine. It has to do with real estate investing and getting in and finding deals now. It has to do with properties I'm investing in now. It has to do with changing my fitness plan and actually transforming my life and my health now. It has to do with transforming my trainer's life now. And it has to do with the contest winner for the grand prize, who I've been hanging with, and this guy is gonna blow you guys away. So we've got a lot of great collabs. It's gonna be one of the strongest fourth quarters that we've ever had professionally and personally, and I want that same for you. Thank you for being part of my journey, and I can't wait to play a role in yours. Thanks, guys. Chat with you soon. Make it a great day. Bye-bye.